Good morning, options traders. Steve Ganz here, closing out the start to finish trade that I opened on Apple here earlier this week. Now, this did not go quite as planned. If you recall, and I'll put the link down below for everyone to go to the prior opening of this trade. If you'll recall, my premise on Apple was that we were running into some resistance, and I was expecting a stall or maybe even a little pullback as Apple got into this 179, 180 range, etc. Because of that, I wanted to build a position that would benefit in Apple's pullback or a fall in Apple. Now, if we take a look at our market here, we can see at the time I put this position on, Apple was rallying right up here in the 178 range, somewhere around there. And we can see that as it came up to the 180 range, this trade was really looking sweet in this 175 to 177 range, somewhere in there. This thing was going to be perfect. And we were looking at maybe $100 in profit, something along those lines, off of a pretty low risk number. And at the end of the day, of course, Apple had the announcement by the Fed that they were going to file charges against them, monopoly sort of charges. And of course, that just tanked Apple over the last 2 days. So again, because this particular position was built with no downside risk of loss in it, even though Apple tanked, this position will end up expiring today, with all three of these call positions being out of the money. So all three of these are going to go to zero. When they go to zero, I will end up with a small amount of money in my pocket. I do not need to close these out. I just let them expire. And they all expire worthless, and then my account has increased by a minimal amount here. The key takeaway, though, is that I had a premise that Apple was probably going to chop sideways or stall in this range based on prior market scenarios, based on technical analysis, basically, that every time Apple fell to around that 180, it bounced, fell to 180, bounced, fell to 180, bounced, finally broke through it firmly, then this area that used to be support will often become resistance. Now, a case could be made that, well, Steve, the resistance here was news. The news is what tanked this thing. The news is what tanked it. But at the same time, even if that news had not come out, my premise is that it would have likely at least stalled in this general range for a couple of days. Had it stalled in that range, that would have been the perfect scenario for a much higher profit target. But again, I built this trade in a way that if it did more than stall, if it in fact tanked, I still wasn't going to have loss to the downside. And that's the thing that needs to be taken away from this particular trade, is you can build trades that if your premise holds up true, you make great money. If your premise ends up failing on one side, you're still not losing anything. If Apple had, of course, ripped up, would have been a different story, and I would have had a plan for adjusting this trade, assuming there was time left to adjust it. So that's it for now on Apple, start to finish. Again, small profit here, but had I just bought the stock or had I done some form of bullish trade, I could be in a world of hurt here right now. So analyzing that market and understanding what the expectations were with that trade setup helped out a great deal in this case. Take care, everyone.